Hey guys, welcome in this video. I hope that all of you are doing great. So in this video, I'm going to break down exactly my trade on Euro USD. I will show you guys everything about it, the fundamental analysis, the technical analysis, how did I manage my positions and stuff like that. Overall, I was able to close 2 positions in a very nice profit. So I'm going to show you guys everything about that. And I think you guys will really learn a lot. It will be extremely valuable. And as always, my goal with these videos is really to give you guys a direct insight on how I trade and how I work on the market, so you guys will learn more about how I do things, and it's going to bring you a lot of value. And my goal as well is to make my free stuff better than other people paid stuff, so that you guys realize the value that we have and how much we can actually help you just develop your trading, right? So just before that we start, as always guys, please feel free to drop a like on the video. I would really appreciate it, and make sure as well that you're subscribed to the channel if it's not already done. So let's start. All right, so Euro USD, first of all, let's look at the fundamentals for the euro and for the dollar, right? Now, in terms of the euro, overall for this year, it has been mostly negative. And the reason why is simply because Europe is facing a massive energy crisis at the time being, right? So if I show you guys this chart right here, so we have natural gas prices in Europe, and as you guys can see, I mean, it has completely just skyrocketed to massive levels, right? Before that, we were trading between, let's say, 3 to 20, right? And right now we are at 200, and we've been at 340, right? So I mean, it's just absolutely insane. And the reason why natural gas prices have risen so much is simply because that Russia is limiting exports to Europe in terms of natural gas prices, just to put pressure on Europe, right? Because Russia still wants overall to invade Ukraine and keep going with their plan. And so because of that, right, this is the situation that is going on right now. So overall, it's very, very negative for the euro. We also have the central bank that is hiking rates in order to try to lower inflation because of these crazy prices, right? Of course, inflation has been going up as well. But the problem is that Europe is quite limited to how much they can actually hike, because it's just going to put on a massive recession in Europe, and it's not really positive neither, right? So the main difference here that we have between Europe and the US is simply that in the US, they are going and they are already pushing rate hikes much faster, and they are going to a much higher level in terms of interest rates than in Europe. So Europe is and has been really negative. Right now, it's a bit more neutral depending to which currency you compare the euro with, but overall, it's been quite negative. And the US, in terms of the dollar, right, it's been very, very positive, and it's been going very, very strong. So if you look at the dollar index in the last multiple months, right, we can see that it's in a very, very strong uptrend, and that it's still going up simply because the Federal Reserve, so the central bank in the US, is the central bank that is hiking the fastest, right, and just making the biggest change in terms of their monetary policy. And so this pushes the USD to a very, very extended and high level, essentially, right? And so this idea here, right, overall brings me to the conclusion that the euro is overall neutral / negative, that the USD is very, very strong because of the massive difference in terms of how fast and how much they will hike rates. And so this gives me a negative bias for euro USD, because when euro USD goes down, it means that the US dollar is gaining value in relationship to the euro. Okay, so essentially this is the fundamental idea. Okay, it's really not more complex than that. It's pretty straightforward. It's just a big divergence between 2 monetary policies and 2 different situations, essentially, right? Now, in terms of technicals, let's start on the higher time frame, just to get some perspective, right? That is always what I do. Now, on the higher time frame, I was able to identify a few big levels. So first of all, we had this low right here, okay, that we have broken, and overall we can see that after the breakout, this is where it accelerated the downside. So this was a massive level that I was looking at. I was also looking at this level right here. So we can see that previously we had a high here, we also had a one here, and we had a low. So this has been a pretty interesting level. And then after that, well, I was looking at all of these lows that we had under here, okay? But essentially the main and first target that I had for this trade was really this level right here, simply because I was not necessarily pushing for such a massive down move here. Okay, I already had a pretty good risk reward ratio to this level here, and that was fine enough for me, you know, with this trade. Okay, so essentially that's the idea. And what we can add as well on the chart is the parity level. So 1, okay, so 1 euro equals 1 US dollar. We can see that we've been holding above parity for quite a long time actually, and now we are just recently getting under it, and you guys will see that this has been a pretty overall important level, right? So in terms of the monthly chart, these were the big levels that I had identified, and it was pretty much as simple as that. In terms of the moving averages or the RSI or the MACD, there isn't much more to say, okay? On the monthly chart, really, there was nothing more than that. On the weekly chart, literally, there is nothing to add, okay? The moving averages don't really tell us anything new. The RSI is quite in oversold territory, but that doesn't mean that the market is going to stop going down, so not really that meaningful as well. So we can already go on the daily chart. Now on the daily chart, right, there is something very interesting to notice, and it's simply that we had a very clear definition of the downtrend that we've been in for multiple months now, sorry. So if we go on and place a trend line, right, we can see that the trend line overall started like this, and we can see that we've been respecting this trend line for a very long time, and that it is still the case, right? So this trend line has been working very well, and we can see as well that with the trend line we have the 50 moving average, okay, that is essentially following the trend line. So this overall is what was defining the downtrend, okay? And we could also have this trend line and just clone it like that, okay, to have kind of this lower boundary right here. So essentially this was what I was looking at. And so when I took the trade, let me bring you guys back to this moment right here. So as you guys can see, at this moment on the market, right, let me just remove the indicators for now. At this moment on the market, right, what we can see is that we already had broken under this massive low right here, which previously it held a few times, as you guys can see. So we already had broken under this level, and we were able to reach the parity level along with this trend line. And so it was a logical place for the market to start making a correction. But what was important to realize is that in terms of fundamentals, while the same situation was still going on, so overall, I still thought, even after this correction, that Euro USD would keep going down. And so what we had here is simply that we got a movement to the downside. So we had an impulse down, and then we had a correction as a 1, 2, 3, 4, 5. This is one of the patterns that we trade inside of the program, okay? So we had a very clear and distinctive 5-wave structure. And so at this time being, right, as you guys can see, this kind of structure makes higher points on the charts, right? So we are just making higher highs as we go. And so it means that the level of breakout of the structure of when we break these higher points is really this low right here, okay? So essentially this is what I was waiting for, to see if the market would break under this level. And what I also was waiting to see is if the market would respect this massive level. So we had the trend line, we had a 50 moving average, and we had this horizontal level that has been broken. And right now this could be a retest of the level. So my thinking process was, okay, in terms of fundamentals, it is still negative. I'm still looking for lower prices on Euro USD, and we have just retested the massive technical level that we had. So my thinking process was, okay, if we go down from here and we break again, I will take the trade at the breakout level, okay? So essentially that is what I wanted to do. Now, if we see how it developed, so we actually did respect this level. As you guys can see, market went down. We did hold this level for a brief moment, as you guys can see. And then after that, the market literally broke under this level and even under this one. So this is when I got in the trade. So I got short right here, and I had a stop loss above this previous high. So as I said, right, this is really the big technical level that the market was respecting. So this is where I had my stop, and my target was at these lows. So as you guys can see, the initial risk reward ratio was not really good, and the reason why I still took this trade is simply because I had other short on euro at that time. So I was short on euro AUD and euro CAD, and you guys will see that later on I actually removed these trades to put back this risk on euro USD. That is how I got a second position, and that is how overall overall, I was able to maximize my risk reward ratio to finish with a pretty nice profit. So at first it was not looking that interesting, but then you guys will see what happened. So I got short right here, then the market goes down a bit, we break under this level, we break under parity, so this was already looking pretty good, right, for a continuation to the downside. Then after that, the market starts to do some up and down around here, right? As you guys can see, nothing much. Then after that, we start to kind of break again lower. We break under this level. So at this point, I'm like, okay, it looks pretty good. It looks like it wants to keep going down. But at that moment, right, I was still keeping my stop loss right here. I was not moving my stop above this level here or above this level here or anything like that, because as I said already like 3 times, what was defining the downtrend was this trend line and this moving average, right? So as long as we are under this trend line and under this moving average, there really is no reason for me to get out of the trade. So I was still just being patient to wait and see how this whole situation would develop. And so then after that, right, if we zoom in a bit and we look at how it played out, then the market started to make a bigger pullback. And then we can see here that the market opened, I remember, I think it was on Monday for this candle here. And we were testing again the trend line and this moving average, but I didn't want to just remove my trade too fast, right? We can see that it tried to break above, but then it went back down. So this was not really looking convincing to me for the moment as a reversal. And the reason why as well that I didn't want to close the trade here is simply because we had CPI, so the inflation numbers for the US the next day. So on Tuesday, we had the release of the inflation numbers. And so I was waiting to see, because if inflation would show that it is still very strong and running to high level, then that would mean that the central bank would need to hike even more to control inflation. And then this would push the USD to the upside, which means that Euro USD would go down. Okay, so essentially that's the thinking process. And so I wanted to wait the next day to see how it would develop. And then we can see that the day after that, it went straight back down, simply because, well, what I was thinking happened exactly the way that I thought, which means that inflation was indeed running still very, very strongly. So the USD gained a lot of value on this, simply because at that point we knew that the Fed would probably have to push rate hikes even more to control this inflation. And so what I did is that during this day, when the market went down and when we broke under the low of the week, so this was Monday, right? So when we broke under this low here, it kind of showed me that the market was starting to, gain some momentum, right? And that it makes sense because we also had a fundamental event with that. And so when the market broke under this level here, I closed another trade that I had on Euro CAD, if I remember correctly, and I put a second position short on Euro USD. And so what I did is that this first stop loss right here, I was able to move the stop loss just above this level right here, because this was now the new high in the downtrend that was respected in the trend line and in the 50 moving average right here. So this was my stop loss right here. So not only I was able to reduce the risk on this first position, but I was also able to close EURUSD, and then I took this risk that I had and I put it back into a second position. So now I had this first position here with very, very little risk, and then I put on a second position around here with again a stop loss above this high, so same stop loss. But again, since I was able to reduce my risk on this first position and also remove risk on EURUSD, I was able to put quite a decent size second position right here. So this was my second short, and the target was also at these levels right here. So if I remember correctly, I think I had a 2 something risk reward ratio, maybe 3, I don't know exactly, but overall now I had 2 positions. So overall it became quite a big position, well, because of that, right? And the overall risk reward ratio now became very, very interesting with how I was able to manage this trade. So essentially that is how I ended up with 2 positions, and then the rest is very simple. So we had CPI data that showed very strong inflation, so the USD gained value right here. Then for the rest of the week, the market did absolutely nothing. And then last week we had the Fed, which came out and essentially did exactly what I thought, which means that they would hike even more and they would hold interest rates very high for even longer than what people thought. And so because of that, right, the USD got another round of push, and Euro USD was able to reach the final target. Now I decided to get out of the trade a bit earlier, so more around here. And the reason why I closed the trade there is simply because I took this risk and I put it back on gold. So that's a bit more advanced, and I'll not cover everything in this video because it's going to get a bit too long and too complicated for no reason. But essentially, right, in terms of Euro USD, I decided to get out just a bit earlier, right? So around here. So essentially at the low of this candle here. So overall, it did reduce a bit the risk reward ratio. But as I said, I took this profit and I invested a portion of that profit on gold. So now the worst case scenario is that I'm still essentially trading the USD to the upside, because overall fundamentally it is still fine for now. If I'm wrong about this, I will be making profit, because the worst case scenario, even if I take a small loss on gold, well, Euro USD covers for this and even more, because I didn't reinvest all the profit. And best case scenario is that I've made a lot of money on Euro USD. I could also make a lot of money on gold if it tends to work in my direction. And so overall, it would be a really, really good situation. So overall, that's the breakdown of Euro USD. So as you guys can see, the trade lasted for about a month, right? Something like that. Yeah, about a month. And overall, I had two positions. So pretty nice trade overall, right? Not too complicated. Overall, I had a nice fundamental idea. Big divergence between two monetary policies, nice technical analysis, following the trend, taking the breakout, riding the move, and just being patient with it, right? Because we can see that for a couple of weeks, the trade didn't do anything, right? So this is why being patient with your trades is really, really important. And overall, that is what will bring consistency if you are able to follow a process that makes sense over the long term. So guys, I hope you enjoyed this video. I hope that this breakdown was clear. If you have any questions, feel free to drop them in the comments and I will take the time to answer them. If you enjoyed the video, please leave a like, as I said, and you can share it around as well. And on that, take care, trade with care, manage your money well, and I will see you in my next video. Bye bye.